Good evening, friends. Today is not a great day, I believe, because market did take a huge beating, and there is no specific reason why market took a beating today. If you speak to 10 people, 10 people will come with the different kind of an answer, the why market took a beating. And I was just looking at what happened to the market, total near about 1% decline that happened, and I think it did recover from the low. But that's not the point today we are going to discuss. We are going to see how do we see the market going forward, and what are the levers or what are the factors that's going to impact the market going forward. So what we do as usual, we'll discuss what happened in the month of previous month, that's in the month of April, and how do we see moving forward. But before I begin my webinar, a small disclaimer that this webinar is just to enhance your understanding about the equity market. Please consult your financial advisor before buying or selling any stock. Past performance is no indicator of future returns, and investment in securities market are subject to market risk. With this, if you look at this market in April, I think it was clear-cut risk-on strategy. You look at the way some of the mid and small cap did well. The complete, if you look at the sector like real estate did well, and normally what we have observed that real estate is one sector that normally does well when there is a risk-on strategy. If there is a risk-off strategy, that sector will not do well. So it was clear-cut case of a risk-on strategy, and this, while large cap just moved up by 1.2 or 1.1%, but sector like metals was up by 11% in 1 month, purely because of China. The PMI data came out very well. The first quarter GDP of China came out very well, and that was a assumption that Chinese economy should do well, and if Chinese economy does well, the metal, which is China is one of the largest consumer of metal, the metal should do well. Advanced decline was extremely good purely because of mid and small cap participate very, very actively. And despite the fact that FPI decided to lock in some of the profits. During this volatile time, there was a one time, because of, you all know that Iran attacked Israel, and yet at that point of time, Vodafone came out with an FPO, follow-on public issue. It was a large public issue. What is surprising there, the retail investors did not participate. They did participate, but it was undersubscribed. Institutional investors oversubscribed, HNI oversubscribed, and due to that, while the HNI and institutional got proportionately, retail investors got a firm allotment. Another good thing is that company did manage to quote above the offer price. So that's a good big relief, because normally what we have observed that when large IPO/FPO comes out, normally price goes below the offer price. That did not happen in this case. Another milestone that got achieved in the month of April, that India first time in the history crossed 400 lakh crore market cap. Another milestone. And FPI sold near about 8,700 crore. And this 8,700 crore looks little less for the very simple reason, outflow, because many FPI did participate in the Vodafone FPO. Let's move on to the economy. Economy seems to be in a very fine shape. Why am I saying so? Purely because of, look at the direct as well as indirect tax collection. The highest ever GST collection happened in the month of April. That collection is for the month of March, that you pay in the month of April. 2.1 lakh crore. Y-on-Y growth of 12.4%. If you look at the net GST collection, that is after refund, the growth has been 15.5%. Now, I keep saying data like GST, data like income tax, they don't lie. The data like toll tax collection, the consumption of the power, this is actual data which clearly helps us to understand the activity in the economy. So sometimes we may feel, this data has been fudged, economy is not doing so great. But ये तो actual है. इसमें क्या fudge हो सकता है? Right? So that clearly, and due to that, even IMF has revised India's GDP for this financial year to 6.8% from the previous estimate of 6.5%. So economy seems to be going to do very well in FY 2025, despite there are global uncertainties continues to be there. Direct tax collection for FY 2024, that number came out with 17.7% growth, almost 20 lakh crore indirect tax collection. So indirect tax like GST, robust growth, direct tax collection, robust growth. At the same time, India is facing a severe heat waves, and this will continue even in the month of May. So be careful when you step out, especially during afternoon time. Please have proper protection. Please be dehydrated. But India did experience, and due to poor monsoon, due to poor heat wave, the strong heat wave, hydropower output fell to 4 decades low. 40 साल का सबसे कम hydropower output है. During the time, this has come at a time when demand for power grew by 11% Y-on-Y in the month of April. So on one hand, your demand for the power keeps going up. Some of the sources of power are declining. And of course, we all have seen our electricity bill going up, or will go up purely because of the demand and supply. Another good news is that while the GST collection is good and everything, India's retail inflation declined to 4.85% in March as compared to 5.09% of February. Having said that, don't expect a rate cut too soon from the RBI. RBI did not cut when they presented their monetary policy in April. They maintain status quo, and it looks like that status quo may remain for quite some time. Why? There are two reasons for that. One is that RBI doesn't want to little too early in terms of cut interest rate, because if they do that, inflation can again spike. And number two, we need to maintain the rupee at the stable level. For some reason, if RBI reduces rates, Fed does not reduce the rate, what happens? There could be outflow. And that outflow, that means rupee can depreciate further. So rupee in last 1 year has been gone down by 2% or so. So RBI is not only maintaining the inflation target in mind, and without mentioning, they're also looking at the rupee dollar rate just to do that. Good news is that SkyMet as well as IMD came out with the normal or above normal monsoon for the June-September season. And that's very good. Why? Because we desperately need good monsoon this year. Last year was not so great. We all know that water reservoir levels have gone down substantially. And if 2 years in a row, if the monsoon is not good, it could have created a lot of problem. But unfortunately, both SkyMet as well as IMD came out with the good prediction. The monsoon most likely, so officially El Nino is over. We are right now in a neutral phase. And then we will have a La Nina phase where you will get good monsoon. We all need to wait and watch when does this La Nina kick in. Does it happen in the month of July? June, to don't expect only. Does it happen in the month of July or does it happen in the August? So most probably our sense, when we went through the SkyMet prediction, when we went through the IMD prediction, we got a sense that the good monsoon will be more back-ended than the front-end. In the sense, we may not receive excellent rainfall in the month of June and July, or maybe July first half. We may not receive a very good monsoon. And maybe whatever the monsoon that we need to receive, I think happen maybe second half of July till September. That's what our sense is. Of course, this number will keep coming. This prediction will get revised in a couple of months. It's all depending upon how the climatic condition gets set up. Another good thing about this monsoon is that the monsoon is likely to be well spread this time, except few pockets of northwest, east and northeast. In other words, the south should receive it because south is seriously facing a lot of water related crisis. So south should receive good monsoon, western part of the country should receive, northern part of the country should receive this one. Eastern part, there is some concerns there. Let's move on to switch to the global economy. And as I was saying, this metal did extremely well because China's PMI data moved above 50%, 50.8. And anything above 50 is called expansion, anything below 50 is contraction in the economy. This is mainly due to the export, that manufacturing activity moved up. And after 6 months, we saw a rise in the China's PMI index, that is Purchaser Manager Index. Chinese economy also surprised on a positive note, expanded by 5.3% in the first quarter. That is 5.3% is annualized, not 5.3% in one quarter. US continues to struggle with the inflation. Couple of months in a row, the inflation data came higher than what was expected. And something very similar happened for the month of March data also, 3.5% as compared to 3.2% of February. At the same time, there are no big relief on the demand and supply equation in the labor front. And due to that, no rate cut from the FOMC. What is becoming more and more clear that we will have a far and few rate cut from the Fed in coming months. Even 12th June doesn't look like a rate cut because Jerome Powell in the press conference ruled out that possibility also. There's another worry that is cropping up in the US, the fear of stagflation. What is stagflation? No growth in the economy, but inflation remains at the high. Stagflation. Stagnant economy, inflation. Why is that so? Because the quarter first data, while the China did well, the US first quarter data came out very, very poor. Only 1.6% growth against the general consensus as was 2.2%. If this quarter, that is the April to June quarter, if the data does not show this one, people will start talking about is US going through the stagflation, and if that is so, it could create some problem for the global economy. While RBI and US Fed did not give any timeline or seems to be more wait and watch mode, European Central Bank said that they may start cutting interest rate very soon. Why? Because inflation is under control. We need to wait and watch. Another event that took place in the month of April was little scary in the sense that Iran attacked Israel. And that really created some amount of a nervousness in the market because there was a report that the Israel attack very close to the Iran facilities, one of the very close to the nuclear facilities, and the Iran retaliated and so on and so forth. That created some amount of a panic situation, but fortunately, the event did not play out the way it was feared to be playing out, and then markets got a sigh of relief that thing doesn't look as bad as what it is looking like. But in all this US market, all three indices, whether Dow, S&P 500 or Nasdaq, close in the red for the month of April. So while Indian market did well, all three leading indices in the US closed in the red. And I was looking at some data in which I tweeted on my Twitter handle and also LinkedIn is that Apple, and see sometimes, we life may sometimes the facts are stranger than the fiction actually. I was surprised to know that despite smart rally that is happening in the US market, especially in Nasdaq, that is tech related, Apple has closed in the red in FY 2000, calendar year 2024. नीचे है, despite market is doing extremely well in the US. When I look at the data for 1 year returns, Apple underperformed. When I look at the 2 years return, Apple underperformed. One of the finest company in the world is underperformed. So sometimes the good quality company can also have a lean face, and that's a classical example of Apple doing that. And we all know that one of the biggest investors in Apple is a Warren Buffett. And yet this company, when Warren Buffett बेच के नहीं निकल जाएगा. He is not the one basically, अरे नहीं चल रहा है, let me get out, why are you holding that stock? He will continue to hold despite his underperform for 2 years, and this Nasdaq did extremely well in that 2 year period. Some of the tech stocks did extremely well. Now this April highlights, let's try to understand advanced decline ratio. If you look at this advanced decline ratio, and there is one particular trend that I've observed, normally advanced decline ratio will be less than 1 in March, and it will shoot up in the month of April. I don't know the logic behind that. So if you look at it, 1.4 the last April and 1.3 here. That's the kind of, we saw that actually. Very surprising, but that's the thing. And even if you look at last March, less than 1, this March, less than 1. And normally then we start seeing some amount of tapering happening in the month of May and so on and so forth. But fortunately, if you look at it last financial year, out of 12 months, 11 months advanced decline ratio was more than 1. Should we expect similar kind of advanced decline ratio in FY 2025? Looks little doubtful. Market cap, I was saying, 4 lakh crore crossed. 403 lakh crore हो गया market cap India का as of end of April, and that's another milestone that we have achieved. If you look at it, sometime last year same time, we were near about 2.5 lakh crore. So the quantum of market cap addition happened is quite amazing. Cash turnover again in the month of March did go below 1 lakh crore. Average increased to 1.06 lakh crore. Again increased very, very substantial. Of course, we are still lower than what it was there in the month of Feb. But the fact that 1 lakh crore itself is a very handsome number. If you go back a couple of years back, we were near about 30,000 crore. So in other words, and who are driving this? Mainly these are the prop books and the retail investors. They are the one basically who have been driving this numbers very significantly. How indices perform? As I said, Nifty Sensex hardly moved anywhere, but look at mid cap 7.1, small cap 9.6, and Nifty Metal on the top of the table with 11.1%. Nifty IT companies did underperform purely because of the numbers that came out, and the commentary that came out from the IT companies clearly suggested that people are postponing their discretionary spend on IT, maybe because they are not very sure of how the economy is going to pan out, and they want to conserve resources to play out that. So I think don't expect great numbers in the first quarter of FY 2025. That is what I'm referring to is a June 2024 numbers. But things eventually should improve because we do believe that artificial intelligence do offer a lot of scope for improve the efficiency with Indian IT software company. Nifty 50 stocks, Who did well? Divi's Lab is on the top of the table. Hindalco, Eicher, Mahindra Mahindra, you can look at Axis Bank, State Bank of India, Power Grid, NTPC, Shriram Finance, Bharti Airtel. So if you look at it, it's a very diverse mix. It doesn't gives an impression that one particular sector basically dominated the list. Why? Because if you look at it, on one hand, we have Axis Bank and State Bank of India in the top performing. We have Kotak Mahindra Bank in the worst performing kind of stuff. On one hand, Divi's Lab is up by 16.2. Sun Pharma is on the bottom of the table. Can you get Cipla is another thing which has been on the bottom of the table. So I think there has been some amount of a mix that we saw happening in the this one. So there is nothing which one can say is a theme that played out in the month of April. There were, within the same sector, we saw some amount of divergence happening in this. But definitely, there's one common thing that you can see in the worst performance when IT. HCL Technology down by 11.5% that you can see here. If you look at the Infosys down by 5.2, LTI Mindtree down by 4.7%. Some benefits of Bharti Airtel coming in. There is one theory which seems to be playing out in the market is that somewhere the ARPU of this Airtel company, not Airtel company, what we call telecom companies is likely to improve. And if that improves, I think company like Bharti Airtel, company like Vodafone Idea or Jio, as in when they decide to go public, it could improve their financial numbers. And in the hope of that, this company moved up. FPI, definitely they sold out 8,600 crore. If you remember, I did predict that don't expect FPI to be positive in the month of April. And DII put in 44,000 crore. So it's little less than what it was they did in the month of this. But it's 44,000 crore is a substantial amount. If you go back to April 2023, only 2,000 crore. Am I right? And they were somewhere about 25,000 crore. But they pumped in 44,000 crore in this. So clearly, DII has basically opened up the purse and they invested very, very heavily. There is a very famous saying, sell in May and go away. Should we believe in this theory? And if you happen to Google search, I've also been quoted by some of the media about this one. So what we did, we are slave to the data. So we look at the data, we look at the pattern, and what we realize is that out of 10 years, that means you bought at the end of the April and you continue to held till July. Because normally आप May में जाके बेच लोगे तो क्या, because we are not selling for 1 month, right? So if you hold on till July, what kind of gain you can expect? And if we look at the data, I think 9 times the market has closed in the green. Only 1 year, that is in 2019, the market went down by 4%. But otherwise, they have been quite positive. So sell in May and go away, I don't think it applies, at least for Indian market. I don't know about the other markets because I have not studied that. It doesn't seem to be applied. But in 2019, which was an election year, it declined. 2024 again is an election year. Will it apply or not? Today the probability looks very high. Okay, it did not happen in 2014, which was again election year, but market went up by 16 because that time Modi became the Prime Minister first time. But something did not got repeated in 2019. The why probability is little less for the very simple reason the valuations are very, very rich as we speak. And that could be one reason we should not expect too much gain for the period till July. That's the analysis that we have done, but we can 100% go wrong. Since it's a result season, it's all the more reason to look at it. Almost 40-41% of the market cap company have declared their numbers. And every time when I come in front of you, the numbers growth seems to be declining. So quarter on quarter growth is 3.5% on sales, 5.2% net profit, Y on Y 13.2 and 21.1% in sales and bottom line respectively. Our analysis suggests that we should expect 16% net profit growth from the India Inc. And every time when I come with the India Inc. numbers, these numbers are declining. Logically, it should settle down at 16% by the time result season comes to an end. Our sense is that Indian net profit for the March quarter should be about 4 lakh crore, and that's what we believe can happen. What should we expect going forward? Definitely there will be market volatility, and there are some news coming in. I don't follow so, but I heard someone saying today that there is a satta market even for the election, and they are saying that probability of BJP getting 270, 280 seats looks right now that's a possibility they are saying. So that could, and depending upon that news flow, because there is another concern about low voter turnout, and that's another concern, that is it in favor of ruling government, ruling party, it's not in favor of ruling party, that debate is happening. And this kind of a news can keep market little volatile. Today, I think the profit booking took place. Maybe one of the reasons could be depending on what kind of outcome we can see in the election. The next month, same time, the election process would be over, because the last day for last phase of election is on 1st June, if my memory serves me right. So on 1st June itself, in the evening, we will have an exit poll, and that would really give an idea about what kind of government we can expect on the 4th June, because that's a counting day. Am I right? So let's wait and watch. But there are concerns on the valuations. Okay, valuations are very, very. There is very, it's very so. This one, there is a little margin for error. If something has to go wrong, there could be some amount of selling pressure that could come in. So our sense is that upside has been capped. There is a downside risk to the market. The US market has gone soft in the month of April, and that should have a market sentiment somewhere down the line to Indian market also. Now, FII sold in the month of April. Should we expect them to be positive in the month of May? The answer probably seems to be low. Purely because of valuations, I don't think they will be very comfortable buying at this price. That's what our sense is. Despite mid and small cap did well in the month of April, we do believe there is a froth in the mid and small cap space. So for some reason, if you have not exited and you have some companies which you believe it's running ahead of the fundamentals, better lock in the profits, because I want you to be really careful. I don't want you to lose money significantly. At the same time, since we are in a result season, do expect price-based volatility depending on the numbers coming good or bad. The script can take a lot of volatility, so be careful about what company you are into. Otherwise, the money which you have made in FY 2024, there is a high probability that you might take out substantial portion in FY 2025, or you may go into negative also because of this market volatility. So our mota sense is that market is likely to remain volatile. Mid and small caps should underperform logically, and upside is capped at this point for the bigger the main indices, major indices. Upside is capped, and there is a fair possibility that we might see some corrections in the coming weeks. So yes, it has happened today. Doesn't look like it's going to stop, but this is a market. Anything can happen. This is what we are just saying. Okay, our sense we are expressing in front of you. We may go wrong also. With this, let's open the floor for question answer. Srinivasan sir says, which sectors to buy in present condition for the tenure of 2 to 3 years? We believe pharma should do well. We believe railways should do well. We believe defense should do well. We believe capital goods should do well. So these are the sectors that I think they should continue to perform well, and hence makes a lot of sense to remain invested for a block of 2 to 3 years. And I'm happy, Srinivasan sir, that you are not asking for 3 months, 6 months, but you are asking for tenure of 2 to 3 years. My sense is that even FMCG should do well, purely because of the reason is that a lot of negatives are there in the price. If monsoon is going to be good, that would give a lot of purchasing power to the real economy, and if that happens, I think FMCG companies should created decent returns. Babu sir saying, assuming that we are investing in proven large cap scripts, can we continue to stay invested? For example, just look at the today's crack in the market, but my stock stood the ground. Please throw some light on today. So I agree with you. If you see in our PMS, what we did, we were 80% in mid and small cap somewhere in the month of Jan or so. Today we are 90% in large cap. And in the month of April, we did extremely well. That is the best ever monthly performance of PMS since we started. In the first 2 days, when the market in the month of May, the market has been a little volatile. When I say first 2 days, not 1st May, but 2nd and 3rd May. The index is negative, the benchmark is negative, but we are positive. So you are right. So if as long as the stock selection is right, you should not be worried about it. And I said reason to exit from any company should not be a function of price movement, should be a function of the reason why you bought that company. Is that reason continues to hold or not? If the reason continues to does not remain so, please get out of that company. Whether profit or loss doesn't matter then. Is it good to buy mid and small cap shares at this level? George said there is nothing called right or wrong. If you think some good mid cap company is good, please go ahead and buy. If you think some small companies are good, please go ahead and buy. We are not saying each and every mid and small cap company is going to underperform. We are saying basket, that's indices, will underperform. So even if some index has to go down, there are always some companies which will do well. So it's all depending on stock selection. If your stock selection is right and you're willing to stomach the volatility, please go ahead and buy. There is nothing wrong with that. If it's a good quality company, you know that this company's valuations are reasonable, please go ahead and buy at mid and small cap company. What we are saying is, in general, mid and small cap companies can underperform and should underperform purely because of the froth. Sorry. Is the GST collection of 2.1 lakh crore due to inflation factor or high consumption of products and services? It's purely because of high consumption of products and services, and also the compliance. I think government has become more, ensured that a lot of people do comply and pay GST. And due to that, it has happened. So, it's purely because of it shows robustness. So normally in the month of April, every year if you look at it, April will always have the highest GST collection for the entire year, purely because of the March is the most active month because the account year ending, am I right? And what you collect, you normally pay to the GST council in the month of April, and that's why April is always the good month. Don't expect some similar kind of numbers in the month of May, June, and so on and so forth. But yes, it's purely because it shows the robustness in the economy. Balchandra sir is saying, I noticed based on the last 1.5 month experience that whenever a webinar is scheduled, that day market always corrects. Is this coincidence? Maybe something for your team to ponder upon? Sir, I did not notice that kind of a coincidence, but good now since you told me that this is what happens. So what I can do maybe, as a strategy, if that's exactly what you're saying is happening, जिस दिन मेरा वेबिनार नहीं, my webinar schedule, am I right? It's all available on the site. तो जिस दिन वेबिनार नहीं है आप उसमें लॉन्ग कर दो, जिस दिन वेबिनार है उस दिन शॉर्ट कर दो. I'm just kidding. I'm not literally don't do it actually, but I have no idea, sir. Maybe it's just a coincidence. When I'm in front of you, the market is correcting. When I'm not in front of you, market bounce. In fact, we keep joking with Mohit. So Mohit, whenever he wears a green T-shirt, we said, Mohit, as market upar jana. Normally that happens actually. And Mohit does not have a red T-shirt, so I will not be able to comment on that. But what I've observed that whenever he wears green T-shirt, market goes up. Same way, if you are saying I'm in front of you and that day market corrects, then you know what to expect on Tuesday. Am I right? Because I'll be in front of you Tuesday. Am I right? My webinar. Okay, Tuesday. Then market should go down Tuesday. Let's see, Balchandra sir. I'll remember and I'll tell you. So Monday I'm not there. So even if Monday market goes down, then we can say that okay, this logic does not apply. If Tuesday market goes up, then I'll say this logic does not happen. If Monday and Tuesday both the market goes down, maybe then I'll see that there is some pattern available between me coming in front of you and market going down. Krishna sir is saying advance decline shows March normally booking profits happen to show good results. April company should rebuild the position. I don't know, sir. Is that the reason? I have no little idea. You may be right in your observation, but I have not applied my mind. To be very honest with you, why is that so? Do people book profit? Maybe maybe it's because of tax adjustment, maybe because of something else. That could be possibility. But how does one explain the April so good actually? They rebuild their position, but should it be so good? And if they are buying, someone is selling also, right? So I have no idea actually. Is it really the case or not? But you may be right in your observation. I have not really applied my mind, so I can say yes or no to your argument. Bibu sir is saying, hello sir, looking at the current uncertainty in the equity market, is it suitable to buy a gold ETF and some physical gold in the portfolio? If yes, how much percentage should be allocated to gold? So Bibu sir, you should never invest in the gold ETF or physical gold. Physical gold तो वो सोच ही निकालते एज एन इन्वेस्टमेंट. अगर आपको बीवी को गहना देना है, ज्वेलरी देना, तो ले लो. That's for the self consumption, but that's not an investment. So always buy gold in ETF or SGB, that's sovereign gold bond. Never buy physical, because physical gold में बहुत कॉस्ट है. आपको पता नहीं उसमें सेल्स GST लगता है, उसमें वो कमीशन लगता है जब बेचने जाएगा, उसका कॉस्ट एंड सो एंड सो फोर्थ. So never buy physical gold. Now you should have 10 to 15% exposure to gold as a part of your total net worth, irrespective of whether equity market performs well or does not perform well. Am I right? So don't get confused. And while we do believe that Indian equity market should remain little volatile in the shorter period, the medium to long term, we are extremely bullish in Indian equity market. And the kind of money that Indian equity market is going to make is tremendously good. In fact, I did predict that the Nifty 50 could be closer to 45,000 by, or I've said 90,000 for, sorry, I stand corrected, by 2034. So I'm extremely bullish on the Indian equity market. This is just the short term. How do we basically manage the volatility? That's a big question. And 10 to 15% to the gold and silver, you can do that as a part of your assets allocation. Under what name PMS is reported to SEBI side? Sir, Infinity Assets Advisor Private Limited. So Prasad sir, our PMS is reported under Infinity Assets Advisor Private Limited. There are two name called Infinity on the SEBI side. So our is Infinity Assets Advisor. Tharis is saying, how much return can I expect from 10 lakhs invested for 5 years? Are you asking me, or are you saying from the equity market? We believe Indian equity market should give 14 to 15% CAGR in next 5 years. If you are smart, or if you have given your money to the professional fund manager, probability is high that it can make more than 14-15% return. But if you try to do on your own, probability is very high that you may basically report less than 14 to 15% return. So now we believe market should give 14-15% return. It's all depending upon your stock selection, your portfolio construct, and so on and so forth. And the most important thing is how disciplined you are in your investment approach. If you are not disciplined, probability is very high that market may give returns, you may not make returns. That's very high probability. Amit Srivastav, how strong is the probability that market finds a reason to correct if the ruling party does not get a clear majority? Ground data is not supporting the number mathematics for them. What is the probability they find market to correct if the... No. So we had suggested in January 2024, if the BJP does not form the government, market can correct by 20%. And it will take 3 to 4 months for market to at least recover that level. So if BJP does not form the government, market can crack. That's for sure. Probability is very high, very very high. I would say the probability is 99.99% that market can crack by 20% or so. In fact, someone was told to inform me, and normally I don't hit to this kind of a rumor. But since you have asked, raised this topic, there is also a fear. Some of the investors have expressed, and that fear is that the long-term capital gain equity, that's all rumor. I'm just stating what I've heard. Neither I'm saying this is going to happen, nor I have any clue on that. What I've heard is that, and not only one person told me, a couple of people told me, that there is a thought process. Again, I remember, mark down my word, you need to, there is a possibility or there is a talk happening that long-term capital gain can be considered as a part of your total income. In other words, if you are paying 10% right now long-term capital gain, depending upon the tax slab that you fall into, you have to pay capital gain. And I said, this is something crazy thing if that has to happen. Why? Then every time I will sell my shares on 364 day, make short-term capital gain, pay 15%, and after a couple of days buy the same company, and again keep repeating that every 364 days. So that's what I heard about it. It's more of a rumor as we speak. But if that has to happen, market can correct. Why? Because people will then basically see it doesn't make sense to pay 40, 45, not 40, 45, not everyone pay, but at least many people would be in 30%. Those who are attending this webinar, many would be in 30%. Why should you pay 30% capital gain if the short term is 15%? Why should you? Logically, it should be other way around. The short term should be higher, long term should be lower. But if the long term becomes more higher than the short term, it makes little sense. So that means what? More people will become traders than the investors, which is not good for the economy, it's not good for the market also. Again, I said these are rumors. There is nothing that I am saying will happen. Is pharma ETF is a good option as has less pharma stocks? Ajit ji, the choice is yours. What you wish to do. If you wish to go for pharma ETF, it's not a bad choice as such. In our PMS, we do have some of the pharma companies. Saju Peter says, what is Gift Nifty? Gift Nifty is nothing but what you used to see in Singapore Nifty, and that has become Gift Nifty. And timing of the same, I'm not very sure. I don't track it, so I will not be able to tell you. But but how does it matter to us actually? Gift Nifty is just an indicator that how the market will open for the day and what happens. Don't give too much. If you're an investor, Saju sir, you don't have to give any importance. In fact, I don't bother to look at it. You'll be surprised to know that. So many times, some people ask me, you must be reaching office by before 9, am I right? For what? Well, the market chalu hota hai. How does it matter to me? Am I right? I sometimes, many times I don't know during the day also what happened to the market. So something Gift Nifty, sir, if you're an investor, how does it matter to you what Gift Nifty is actually? It's just a derivative of Nifty. So in the morning, it just gives an idea about what should we expect based on Gift Nifty, how the market will open up. But beyond that, I don't see any utility value. In fact, I don't know what are timings and how does it work. I have not even bothered to pay attention also. Dr. Satya sir is saying heat wave, rainfall, natural disaster, event that occurs by climate change is going to affect market. Does market consider these factors and do market research while investing in PMS? No, sir. We don't do anything of that sort. See, ours is driven by the IP. Now, our IP is so powerful that it captures the sentiment of the market also in one way or other way. In terms of valuations, in terms of technicals and so on and so forth. And remember this heat wave, rainfall, natural disaster are going to be recurring things. It's not going to be that it's going to happen only in 2024 and it's not going to happen in 2025. Even if I have come in front of in 2034 also, we would have seen these things are happening. So it's recurring in nature. What our IP does, sir, in our PMS is that we look at the company that's going to perform well. Despite the natural disaster, despite rainfall, despite heat waves and so on and so forth. And we then try to see whether does it make sense to add those companies in the portfolio to generate the alpha. So that's what we do. But we don't have any specific parameters that goes into IP to make IP work on this. We don't have anything like this. Yes, sir. What is your view on chemical sector, which is not performed well in this rally? You are right, Varun, sir. I think it has not done well. But if the China has to come back, and that's what we have seen, I think it should. It just, see, sometimes, it just taste our, what we call, patience also. That, कि कोई सेक्टर चलता नहीं है और जब चलता तो बहुत जल्दी चल जाता है. Kind of stuff. If you ask me logically, if China has to do well, the chemical sector has to do well. And then something called law of average. Say for somebody 2021, these chemical companies were commanding, which even FMG companies were not commanding. And if you go back to my webinar at that point of time, I suggested and said also, how can you even justify this kind of evaluations? Chemical is a commodity business, while FMC is a branding business. Am I right? They should command more premium as compared to what chemical companies, but they were surpassing FMC companies. So this market correction has happened, which is rightly so. But logically, if you ask me, if I have to take a 1 or 2 years view, chemical companies should also do reasonably well, because right now downside risk seems to be low, upside potential seems to be high. Oh, Sadal Kumar. Sir, return for 5 years, you mentioned 14 to 15% or 40 to 50%. Prabhu, it's 14 to 15% CAGR, compounded annually growth rate. So for what I mean to say is that if you look at 14 to 15%, 1415, we should double, but 100% return in next 5 years. Okay, but 14-15% CAGR that I am referring to. In other words, absolute value, the index can double from this level in next 5 years. Bhargavi is saying, thanks to the mojo, my personal portfolio doubled since 2022 June after recovering drawdown since December 2000. The major mojo scored and the technical trend has helped. Only mistake is from my allocation in individual stock. I am 4 by X and 2X in some stock. I have stopped downtrend averaging and started upward averaging. Thanks for your all effort. Thanks a lot, Bhargavi ji, for your kind words. The market remains the same. Some people make money, some people don't make money. The problem is that those who don't make money, neither they have patience nor they have discipline. The people, those who make money, who have discipline. So someone has said very nice thing. In equity market, to make money in the equity market, you don't have to be super intelligent. I've seen sometimes the dumb people make more money than the intelligent people in the equity market, purely because the dumb person, when I say dumb, don't literally, I'm not trying to put down someone. What I'm saying, you don't have to apply too much mind. That's what I meant to say, dumb in the sense. Approach what I'm trying to say, not the quality of that person and intelligence of that person. The thing that you need to do, because those who are basically super intelligent, they will do this, that, ye karunga, wo karunga, and eventually they go nowhere. While the person who remain calm and composed normally takes away all the gain. So Bhargav, I'm very, very happy. So we did a lot of education in terms of downward averaging, why it is not in the favor. And I'm very happy that you listened to that webinar, you followed in real life. देखो ज्ञान तो सब लोग देते हैं. How many people do use that knowledge to their benefit? Many times I've observed, people basically listen, but when it comes to implementation, They are -5. Forget about 0 also. And I'm very happy, Bhargavi, that you in fact, people should learn from Bhargaviji's experience and try to imbibe in their personal portfolio strategy also. I'm so sure you will, because she mentioned that in December 2000, that basically she did say drawdown. She did not lose heart. And then she has seen the upside in the portfolio also. Good, very good. I'm very happy for you, ma'am. Unsold model portfolio IT stock is down 30%. Any plan to exit? I don't know which company you are referring to. And model portfolio, I have little less knowledge, so I will not be able to comment on that. So maybe you ask Karan on Monday, maybe he may have an answer for that. I have little idea on that. Virod Kumar, sometime back you were suggesting not to bring fresh money into equity PMS. Is that well still? You are also suggesting staggered investment 3 to 6. Is there a change in the strategy now? No, there is no change in the strategy. We are saying do not increase allocation to equity at this point of time. We continue to maintain that we do believe there is a fraud, especially in mid and small cap. It should correct. And we are doing staggered investment in our PMS all. So the same strategy we are following, and same strategy I would recommend you to also. So yes, in PMS we are investing anywhere between 0 to 120 days. Any additional investment, any additional new money coming in, 0 to 120 days. And of course, we will keep readjusting our strategy based on the market dynamics. Frank is saying Sunil, stocks are jumping, bond yields are fall after Goldilocks jobs data, a weaker than expected April jobs report, and strong corporate earnings are driving the major indexes higher. Is that the job data has come out today, which is little weaker than the what was expected? Because today it's supposed to come out. I have not looked at the data, and have U.S. hiring slow to 1 point. Yes, you are right. So U.S. hiring has come down. That's a good thing. Bond yields have fallen. I have not looked at it, but that's a good because that's really help indices to. But one day, Frank sir, does not make the complete this one. Am I right? We need to wait and watch whether it gets sustained or not. The sentiment I'm talking about. Sometimes there may be good news and yet market does not move up, and sometimes there's a bad news and yet indices go up. It's all function of liquidity and the sentiment. So today, what you are saying is right, but will this get sustained? I'm talking about the U.S. market. We need to wait and watch. As we speak, U.S. markets are closer to 1% up. Whether they're able to sustain or not, I have no idea. In the month of April, the things are not as good as what would have expected to be in the stock indices front. Nimesh, how can we hedge our portfolio during election period? Please explain hedging strategy, please. So Nimesh ji, we don't do any hedging strategy in our PMS. And hedging does come with the cost. So one of the best way if you wish to hedge, maybe you basically, whatever the value that you have, to that extent you can go short on Nifty 50, either through options or through futures to hedge. But if you ask me very frankly, I don't think we need to do that because eventually in the long run it is all futile exercise. So we don't do that in PMS. I'll be very honest. I don't do it on my personal portfolio also. Okay. And hence I would not recommend because ultimately this volatility that we are talking about is for a couple of months. Why to basically unnecessarily spend money? Sometimes it doesn't work out the way it should work out. Then again you will end up losing the money. So I would recommend don't do that. Let's ride out this volatility without taking any hedging or something. Amir tells me there are no more questions from our participants. So thanks a lot everyone taking time out. Please stay indoor if possible during afternoon time. Heat waves are a very serious thing. Don't take it lightly. Enjoy your weekend. And again, see you Monday. I think Karan will come in front of you and Tuesday I'll be in front of you with the Q&A with Sunil Damania. Till such time, good night. Take care.